Preface. Challenges surround us. The pandemic, which has been shaking up our lives over the past 3 years, is still ongoing, and the economy is deteriorating. It is a repetition of the economic cycle which follows the stages of recovery, growth, slowdown, stagnation. The question now is where exactly in this cycle our economy has arrived at and how quickly it can recover. An analysis of several leading economic indicators, such as stock prices, due diligence index, long and short-term interest rate differences, and purchasing managers index, reveals that the global economy is showing signs of entering a complete slowdown or recession, according to NH Investment and Securities Research Fellow Baek Chang-gyu. This is especially the case in the United States. As inflation soars, interest rate hikes continue. The U.S. Consumer Price Index is at its highest level in 30 years since the 1980s, and the 10-year U.S. Treasury yield is also at an all-time high of 3.5%. Consumption is also shrinking. While real household income declines, e-commerce sales decline as well, and outstanding credit card payments rise. Indicators across the board are negative regardless of which side, macro-micro, or production-consumption, you look at. The National Bureau of Economic Research predicts that the U.S. economy will hit the bottom of a recession in the first half of 2023. Considering that the Korean economy tends to lag the U.S. economy by 1 or 2 quarters due to its high dependence on exports, one can infer that the Korean economy will continue to slow in the first half of 2023, and then bottom out in the 3rd or 4th quarter. Thus, the economy is unlikely to show significant improvement throughout 2023. There are warnings of an economic crisis. The economic forecasting model developed by the Mail Business newspaper and the Korea Economic Research Institute, using 6 leading economic indicators, such as trade balance, exports, producer price, cyclical change in leading economic indices, Kospi index, and business survey index, estimated the probability of an economic crisis comparable to the 1997 Asian financial crisis occurring within the next year to be 66% as of July 2022. The geopolitical outlook is just as dark. The war in Ukraine looks to last longer than expected, through to 2023. From an economic point of view, the focus of this war is not when will it end or who will win, but how long will sanctions on Russia last? If strict economic sanctions against Russia continue and Russia keeps gas exports to Europe cut off, it will have an ongoing economic impact on Europe and in turn the global economy. Geopolitical tensions between China, Taiwan, and the United States are also intensifying. While it is unlikely that China will invade Taiwan, as some worry, there remains the probability of small provocations and localized conflicts continuing between the 3 countries. It is likely that 2023 will be a complicated year for South Korea, which faces a difficult dilemma due to its high political and economic dependence on the U.S. and China. Describing the international political and economic order of the 30 years following the 1980s is something akin to describing a flattening Earth. Through the WTO and FTA agreements, trade barriers between countries were lowered and political conflicts eased. However, those times in which the economy came first are coming to an end. Now is the time when the political reasoning of each country takes a front seat ahead of market efficiency, says Shin Hwan-jong, Managing Director of Korea Investment and Securities. The pandemic has especially accelerated this trend. Countries are building up barriers between themselves, and ideology is increasingly becoming more important than pragmatism.